Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Friday, May 26, 2023. Please click like if you would and subscribe to the Wicked Stocks YouTube channel and check out wickedstocks.com, where we offer a full suite of daily and weekly analytical videos just like this in the Daily Triple Q, the Daily SPY, two individual stock picks every week. We've done lots of stocks over the last couple of years. We've done NVIDIA a few times, 3 or 4 times in the last year alone. And I'm going to show you an NVIDIA chart here because I think it has relevance with respect to what we're seeing here this is a long-term price ceiling. This is a weekly chart, by the way. It goes back to 2018. This channel structure actually comes off the 2020 low against the 22 low, and this intermediate high is at 383.12 this week. Well, today, Friday, is the last day of the week, so this is going to be a relevant formation. If we're unable to settle above this formation, this is, believe it or not, short setting territory. Now, there's no sell signal at play. It's just this is a 2 to 3 year channel top, and we can quite easily, at the very least, over the next few weeks, fall back to the 346.47 former high here from late 21, and even on, as we continue into later year, we could certainly rotate south in a more meaningful way. So this 383.12 is a big pivot point for NVIDIA. If we close above it, needs to be by a 1% margin. 386.95 settlement today or higher, and NVIDIA enters a whole nother dynamic of longer-term bullish continuation, where I would anticipate, this move here from January 22 to there's about 20 months in the making. So, once we get above, if we get above this channel top, another 20 months perhaps, a couple of years where we could reach this full channel extension at 644.47. Bottom line, you're long NVIDIA with a settlement today, 386.95 or higher, and you are playing the short side, believe it or not, if we cannot close above 383.12. This is in line with what we're seeing with the Triple Q. The Triple Q is also testing significant overhead resistance that's been an objective for the last few months. And we've been showing this every single day in our daily Triple Q report on wickedstocks.com, where we apprise our subscribers of these formations on the daily chart to the very tick. We show the rising channel bottoms, the sell signals on the way down, so forth and so on. But with respect to the Triple Q, of which, Apple, for instance, is a big part of this, and NVIDIA is 6% of this. So if we close today at 343.48 or higher, 1% beyond 340.08 in the Triple Q, longer term bullish continuation for the Triple Q. But until then, we can fall off. So what I've shown you in NVIDIA and Triple Q is the fact that we're testing long-term resistance. And Tesla earlier this week actually tested its own targeted long-term resistance all week long at 192.40. This had been an objective, as you're well aware, as a 1 to 2 month target following the testing of this channel bottom that is presently at 146.49 that was performed in early April. Following this test, we were pointing to the 190s. That 192.40, by the way, is 194.97 on the daily chart. This remains our ceiling of resistance that we have essentially tested because we actually tested it, pushed through it actually just a bit on the weekly chart. So we are susceptible, as NVIDIA is and as the Triple Q is. They haven't violated their long-term price ceiling, so they are deemed susceptible to falling off in a big way as we move into June trade. In fact, with respect to Tesla, I consider 168.19 a 1 to 2 week target. Now, it doesn't mean we won't rally back and retest the 192.40 to 193.73 region over the next day or two, possibly today. I'll get to that in a moment. But overall, over the next couple of weeks, 168.19 in reach, and over the next couple of months, 164.49 once again. If we were to close over the next week or two below 168.19, you've got a 1 to 2 week sell signal down to 146.49. So that could be sooner than 2 months, certainly. Let's cover the day itself. I still have this channel top. I've reduced it to intraday only. We opened above it on Thursday and then broke back below it. And if you watch that 5-minute chart, it actually performed pretty well the balance of the day in containing intraday highs. It's just that some of you may have gotten long with the open above it and then we broke early in the morning. Anyway, 186.70 still there, still able to contain intraday buying pressures, and below which we can test the rising channel bottom at 177.51 today. So 186.70 is a pivot point, below which, as I say, 177.51 in reach, where a daily low can be placed. We might bottom out here into the middle of next week and rally back into the 190s again within several days. We could spend a few days in this zone. If we settle today below 177.59, that signals 168.19 Monday, Tuesday of next week, where we could bottom out through next week. And so, in terms of the day itself, what do I think about the day? Well, I'll tell you, below 186.70, I expect 177.51. And above 186.70, I expect 192.40 to 193.70. It's about as simple as that. And once again, if we close today below 177.51, no good reason to be long into next week. If your time horizon is 3 to 5 days, 168.19 then expected, where you can go long. If you're a 1 to 2 week swing trader, you can go long at 168.19 rather, anticipating the 190s again within a week or two. And in fact, it was the pushing into the 190s earlier in the week that prompted the possibility of buying, say, 145 out of the money puts that don't expire for at least a few months, or 170, 175 out of the money puts that don't expire for at least a week or two. That is still the dynamic. And so I think I've covered the downside pretty well. If we get a significant rally today and close above 193.73, it does really need to be above 193.73, which would obviously also be above that is the wrong chart, also above 192.40. Then over the next week or two, 3 at the very most, I would expect a test of this 211.85 long-term channel top, the bottom of which contained the January lows, the top of which we've yet to retest. And if we do, it may well contain buying into later year, and if settled above, would be our long-term buy signal for Tesla into later year. Until then, this band of resistance is really sort of the sell zone for the time being as we move through the third quarter. I don't know if there's anything else to say. I'm going to take a look at one more chart here. Just a reminder, 186.70, your intraday pivot point. All the minor points have been carefully chosen. They're all very tradable, but the one that stands out the most is still 186.70, below which 177.51 in reach today, above which 193.73. And that is all I've got. We'll be back Monday afternoon, actually, for Tuesday's Daily Tesla next week. Remember, Monday is Memorial Day. So you have a great weekend, and we will talk soon. Please click like, subscribe, and check out wickedstocks.com.